Welcome everyone to the next episode of Impactables with Rishav. Today we have Anurag from Bessemer Ventures. Hi Anurag.
Hi Rishav. How are you doing?
I'm good.
Thanks so much for calling me here.
Thank you so much for coming so far and to Bangalore on Friday.
No, it's always a pleasure to talk to you.
Great. So can you just tell me about your constructive roadmap of your entire journey, like how, from where you started your journey in terms of your education, your home, and then what are the things you were focusing upon?
Yeah, so grew up in Surat. My father had a variety of trading businesses, starting from jewelry to chemicals to tea. So always grew up in a household where there was always some element of business involved. And over a period of time, I realized that that's what I would love to do, like be associated with businesses either directly or in some capacity, either advising them or investing in them. And with that mindset, not everything is planned in life, but thought that chartered accountancy would be a great place to start, especially just the ecosystem in Gujarat and Surat. Completed my education there, and then there were lots of choices what to do after that. I thought I was good at tax, finance, and but I thought just working with businesses would be interesting to start. So started with investment banking, spent a year and a half in organizations, but realized that I like investing. Sort of learned the art of investing a little bit to begin with through colleagues when I started my career, and then moved to a fund called Lighthouse Funds. Spent a couple of years there. Loved the playbooks that they had, and continue to be really successful with them. And then moved to Temasek. Spent about 3.5-4 years there, and then after that moved to Bessemer and been spending the last 4 years in Bangalore with all the startups and all the excitement that this city brings.
So before this Bessemer, you were in different city, right?
I was in Bombay. I was there for 7 odd years, primarily BKC, Lower Parel. So saw my journey also sort of scale from where I started to the sort of learning phase of my life, and enjoyed that time in Bombay. I still travel almost twice a week to Bombay. I look at financial services at Bessemer, so naturally BKC is a hub spot.
Correct.
So we may meet more often in Bombay if a founder is in BKC than actually in Bangalore. So I anyway travel a lot to Bombay.
So for you, it's been 7-8 years.
Yeah.
Now focusing much on consumer, fintech, and I think software as a service. But let's take consumer, fintech, and the consumer one. Sorry, software one. So in that particular case, where did you find the most interesting startups in fintech? Bangalore or Mumbai? How are the dynamics? How the mindset you saw among the founders?
I think the pedigree of the founders almost is not governed by the city, right? And most founders eventually, if you're building specific products, then there is a difference in how you operate, right? So if you're building really for the banks, then you can have great engineering teams out of here, but you then have even stronger muscle power from a leadership capability perspective in BKC or around those parts of Bombay. So you sort of place yourselves there so that you can serve that customer base really effectively, or be it insurance companies, lending, etc., right, or payments. But and as you think about where you can experiment faster as you build early stage businesses, if you can find pockets of experimentation, that could be Bombay or it could be Bangalore, or it could be Delhi, or it could be any place else. But you have to find those pockets of experimentation. So I've not seen a massive trade-off where you start, but eventually, if you start a certain place, then you want to spread everywhere else, right? And some of these cities, especially the tier 1, tier 2s, if you're building software, they become the hubs for you to scale. And then there are also very interesting founders on the financial services businesses which are serving consumers. Then you straddle in tier 2s, tier 3s, tier 4s, which are also really underserved, and you can go and attract those audiences for your consumer products. But it's just understanding who the customer is, and then you build it from there, hopefully. And then you have to build a team, which is the harder part. Sometimes you find it in Bombay, sometimes you find it in Bangalore, sometimes you find it remotely. So, not restricted by cities, but that's how we've seen it typically play out.
Interesting. But when it comes to like fintech as a whole, like which theme you understood that which is very interesting, or we say that it's growing in the market. There's, because we have seen so many things, right, from savings app to investing app to utility apps, and then to lending as a bigger arm. And then now we see that B2B fintech arms or infras increase a lot actually. For you in this whole years, what did you find more interesting, and you see the bigger roadmap coming for them in the future India?
Yeah, that's a very interesting question. So in fact, as India has evolved over the last several years, it's also evolved in terms of the technology stack or the backbone of how these financial products are delivered. So case in point, say 2015, 2016 onwards, you saw Aadhaar, you saw UPI, you saw different modes of NPCI delivering great innovation, and more recently there's enough use of some of those, right? Like UPI Autopay or some of these products have really made businesses really strong in terms of capability set. So as capability sets, be it innovation by banks or insurance companies, where they are enabling distribution through digital mechanisms, or think of enablement by the government or institutional bodies who are supporting them, or just innovation in terms of technology. You can call it AI today, you can call it machine learning earlier, but just innovation on technology and just the learning curve of founders. You see now more people wanting to come to entrepreneurship who've seen some playbooks, some new folks wanting to test those playbooks out, find problem statements within those playbooks, and we've always also evolved over a period of time. So when sort of I started my career at Bessemer, and even prior to me, we were focusing on roadmaps around financial services, software, infra. We backed companies around that theme, and we continue to do that. We continue to find that exciting as technology has shaped, and now we are seeing opportunities also across wealth, across software powering wealth as a whole, as an industry. So you see the front end and you see the back end, and if you know the nuts and bolts of how each of those operate, then you can pick the right teams to be able to do that. So not constrained by software, but are there underlying tailwinds for growth? Do we see a market, a decade, 2 decades, where this product or this business and this team can sort of sustain that long-term compounding? And there is real infra moat, right? You are not just building fancy UI UX, but you're actually solving a problem. And if this platform, be it consumer facing or a business facing, if this didn't exist, will it like really crumble something? Will there be a pain point which will be felt? And if we can visualize that, that's how we invest across like really early stage companies to more mature businesses who are growing. But just seeing innovation cycles change, we also have to change. Our business is unfortunately not static, that if we have a point of view, we can live with that point of view for long, just because of the nature of innovation cycle and people changing over a period of time.
With this, actually, with everything you said, there's a company which I am also an investor. I was an investor now, and now you guys invested. This is called Transbank.
Yeah.
So they were doing these things only. Initial, like when I met them in 2022, like I knew them founders from 2021. They explained me certain things. I didn't understood, because that time the market was getting adaptive to it, because people are not aware of this infras. People are not aware of things, these basic terms like transaction banking, infras, connected banking. People were not used to it. Now people are used to it because of the knowledge and the education.
Correct.
For you, actually, what made you guys invest in that company?
I think it starts with the founders, right? Vaibhav, Sachin, Pulak, Lavin, they come with that deep domain experience. They've lived banking and transaction banking with large organizations, and they've created businesses for those large institutions. And when we met them, over the course of years, we found that they're also incredible learning machines. They are able to actually create value not just for themselves but the connected ecosystem. And Transbank, just given the complexity of infrastructure in India, they are solving pain points for a lot of people, from banks to other lenders beyond banks, to fintechs, to corporates, and really building an operating system which folks can leverage and build and do more business efficiently. And when we saw that in how they've been able to attract banks, attract institutions, corporates, and we saw it real with numbers, right? And we were able to comprehend how their experiences have led to the execution. That led to the excitement, and kudos to the team. it's still a long journey for them, but excited to work with them and excited to work with the broader team at Transbank.
But do you see the mindset shift, because some might approach you in very early, like pre-revenue, they have a product. Some might not have a product, but then they approach you after having some traction.
Yeah.
And then they approach you having certain traction.
Yeah.
We can say $5 million company to $50 million company to $200 million company.
Yeah.
This can be one roadmap of person approaching you.
Yeah.
Do you see someone approaching you at $5 million and $200 million? You have observed for the last 2 rounds, but you have not invested. But in $200 million, you chose to invest.
Yeah.
So what excites you during that time that didn't excite you earlier?
I think we are also learning, right? I don't think we are, we can sort of, at least I can't claim that I knew it all or I could have foreseen change. So we are also like always trying to learn what's happening, and sometimes we understand, sometimes we don't. But the idea is always building conviction, and conviction at different stages is very different. A 0 to 1, you see the signal from how the founder is doing it himself, how he's trying to solve problems, how he's trying to find problem statements, build solutions around it. But it's a lot of just insane learning curve that the founder goes through. And are we able to visualize that learning curve with the founder? Sometimes it's possible, sometimes it's not. From a 1 to 10 journey, it's a little bit of how they've started using the learnings or the insights to actually deliver something which has foreseeable unit economics, foreseeable margins, and early signs of the team build out. Still the founder is leading, but you have early signs of team build out happening, that hey, he's building an institution, or early signs of building an institution. Once you cross the 10 million mark, then it's about how you've established some element of leadership team. Is this a process driven organization, or is this a
just doing
it because there's massive tailwind? And that time is also when you realize that if you are building also for survival. So if you've crossed a certain threshold, then you're also trying to sort of be ahead of the tailwinds, right? So if this tailwind got over, what do I do next? And are there systems or processes, leadership teams that can execute those playbooks? And I'm able to visualize the next thing that's possible once I've established a particular journey. So it's almost like 0 to 1, 1 to 10, 10 to 100. It's a founder wearing different hats. They are also evolving. And every such sprint is a sprint with different shoes altogether. So you have to keep learning, keep changing, and hopefully, the ecosystem as it matures, and we've seen that over the last 20 years, at least in the Indian startup ecosystem, people who've been operators coming into startups, people hiring operators within their startups, young guns, 19, 20-year-olds building fabulous businesses, and them attracting real high quality talent. As this ecosystem sort of matures, these playbooks hopefully become more real. And it's not like we know this, but our job is a little bit of pattern recognition, right? We are trying to see what's working in companies that are doing well, what's not working in companies that couldn't execute, and then we're trying to share those learnings. So that's also a job that we have to hold ourselves to, that can we really help these entrepreneurs as they embark on each of these journeys.
From this only, like what happened for me last 5 years, I saw 2 things. Number one, veterans are coming to startups. Like I've seen these bankers or any like retail giants, people actually coming to startups and joining early teams of the startup, which is not a big company. And they are not joining because of money actually. It's very secondary for them. When I spoke with them, because they also say that they are not going to be able to pay me, or neither I want to get paid that much. I'm here to learn and see the next wave of India. And there's another way around. In VCs also, we see some founders who've executed their company very well. They end up joining as a partner or a senior level of VP in the company. So this cross-functioning has increased a lot, which was not there before Corona, I believe. After Corona, I have seen this a lot. So do you think that there was any certain factors which made people think like this, or due to certain new technologies coming in the market, because we say that AI is there, a lot many things are getting changed. So it is due to that or certain other things?
I think it's a little bit about motivation, right? It's not as, if you boil it down, there are people who find motivation in different phases of life differently. I don't think money is not a motivation. You are just waiting for it, and there's a purpose behind it. So, the purpose is oftentimes, hopefully, is ahead of motivation or to make money. But if you are aligned to a purpose, and if you see that there is an opportunity, and if you believe that you can execute on that opportunity by coming outside an institution and being an entrepreneur yourself, then that's a playbook that most people have actually seen successfully. So I wouldn't say in the last sort of Corona period, always there is, as India macro grows, GDP grows, more founders come in, more venture folks or investors also want to invest in these founders who are trying to build new companies, right? So as ecosystem matures, you always see higher velocity of entrepreneurship, and hopefully that continues for us to survive. But the pattern recognition is a little bit about, hey, are there operators who are seasoned or believe that they can actually execute and have that vision and learning ambition to be able to build a team around them? And a lot of folks that we've had the chance to partner with, sometimes they came with the same playbook to execute, that hey, we've done this, now we can do it ourselves and build a company around it. Sometimes they also enter into sort of uncharted territories, but they have some execution skill set. They have worked with people, and sometimes they're founders who are just really young, but they have novel ideas and they have the appetite to take that risk very early in their career. And with that risk, they have more time to make mistakes and learn from them and be able to execute. So I wouldn't sort of restrict myself to the COVID period, just having the benefit of seeing this in the last 10, and folks have seen this before me. But operators turning founders, founders who are successful coming into our industry as investors, it's benefiting everybody.
Because now you know how to look at some founders.
Exactly. Whatever we learn is actually a combination of what we've heard and sort of seen in rooms, seen how folks react, seen how people think about opportunities, how they think about risk trade-offs. So it's learning from experience, and if you can find that experience through hiring, through a board advisor, through a member who can help you with those playbooks, it could be a GTM advisor, they're always valuable. So even with how we operate, we never claim that we know everything, but we're trying to help our founders with either our advisory network, either our founders who've executed this, or extended network of people, to make sure that if you have the experience, then how can we benefit you through the extended network? If you are coming in fresh to an industry, then how can we at least help you with playbooks that have worked for folks, so that you don't hopefully make the same mistakes, right? So it's minimizing mistakes, taking balanced risk calls, but also believing in the idea yourself that hey, if this works, then we can be really successful at it.
But this is also very good angle to it. What happened, because of this, the distance between VCs and founders have decreased a lot.
Yeah.
Previously, people used to think mostly founders used to be fear that should I reach to this person, should I not? What this person will say, this person will not reply. All these questions used to come. Now that ecosystem has come too much closer.
Yeah.
It's nothing like that people will not speak to you. Everyone speaks to everyone.
Correct.
It's just how you talk to them, when you approach and how you approach.
Yeah.
As simple as that. This I have seen.
Yeah.
If you are just randomly texting anyone, that is very different thing. But today with an intent, every other founder and VC know each other.
Yeah.
In a close ecosystem.
Yeah.
So this is the best thing which happened over the times.
Yeah, it's amazing, right? There are, as you think about it, there are several ways now that we overlap with our community, right? You think about an internet overlap, which could be a LinkedIn or communities on different social media platforms. If you think about events, India didn't have the proliferation of a GFF.
Correct.
And the host of events that we host, companies want to host. Just bringing people together who can help the ecosystem is a theme that you can see shaping in the last 5 years. And that may be true, especially in India, for financial services around and post-COVID, that hey, GFF really benefited people to connect, especially large institutions also participating, the regulator participating, fintechs participating, investors participating. So you're creating a network of people, and that flywheel will compound. Now you bring in technologists, India and outside India. You bring in all the great work that our institutions are doing to bring in different sort of elements to that, right? Be it content, be it technology, bringing in outside expertise to this, right? Bringing in partnerships that can help you do GTM outside India. So that network has really helped our founders also to scale faster. And to the point that you were saying, that new founders can now approach this network. That hey, this founder could connect you to the 5 people who may be able to, explain what are the risks and opportunities to a particular topic. We've built our network so that we can help founders also execute some of this. So it's that network orientation that's benefited folks.
Interesting. So we spoke decently about financial sector, more about VCs and founders. But there's a consumer brand also which you guys focus on the consumer sectors.
Yeah.
All these years, how did you saw the shift? Because for you 8 years, it was before Corona also. Before Corona, after Corona, how did you saw the consumer brands shifting their gears from the markets? Because older brands are coming and online and new brands are going offline.
Yeah.
So, and you guys also invested in consumers, like from your past companies, you Zomato, Ola, Casify, ShareChat, all these companies. So what was learning from this entire duration of consumer?
I think if you look back 2011 or 2012, right? You had the Amazon, Flipkart ecosystem really create talent pools and sort of build really large businesses over a period of time. Then there was this shift from 2013, 2014 onwards where you saw vertical marketplaces emerge. So companies like Big Basket, companies like Swiggy, Urban Company, PharmEasy, if you think about Ola, or if you think about Nykaa, there was this proliferation of can we verticalize quick commerce? Because there are large profit pools, you can create habit loops much easier and you can build product catalogs, reviews, ratings, build better distribution funnels and serve customers on those repeated habit loops, right? If you think about the phase after that, you saw D2C, which benefited from either the vertical marketplaces or it benefited from the horizontal marketplaces. You saw traditional brands using this distribution, again vertical or horizontal marketplaces. And you saw newer brands who saw that, hey, we don't have to go sell to offline stores day one. We can build larger businesses even on these marketplaces.
Online, yes.
So that was phase 1 of the D2C brand and vertical marketplace, horizontal marketplace. Then you saw quick commerce. A lot of people didn't see it coming, but you saw the likes of Zepto, Swiggy, Instamart, Blinkit create a new parallel marketplace ecosystem, which effectively gave you one more channel of building. Now you are seeing a D2C brands 2.0 version where traditional brands anyway have one more channel of distribution. So a lot changes at the back end when you have to really serve this audience as well. But you're seeing newer D2C brands who are benefiting from this quick commerce channel of distribution to vertical marketplaces to horizontal marketplaces. And you have a choice to start from one of them. If you have the right product, for example, hypothetically a new age ice cream brand, they could sell on actually a quick commerce and build a business around it. You couldn't do that with vertical or horizontal marketplaces theoretically. Or if you think about sports category as a apparel where there's immense tailwind around it, you can benefit from an immediate behavior that you see on quick commerce, but you can also sell it on the vertical or horizontal marketplaces. So that's the sort of second wave. And now there is like a lot of data play even in India around this whole ecosystem. You have direct commerce companies who are helping these traditional and newer businesses. You have whole AI services businesses who are helping them out. You have really seasoned marketing operators who have figured playbooks for each of them, so they can benefit from different marketing playbooks, different product packaging playbooks across each of these verticals. And hence you are seeing a lot of entrepreneurs finding pockets of consumer stories to build from. How we think about it is also very similar, right? Are there categories which still continue to be high growth categories, which are still benefiting from tailwinds? Like sports is one. Within the BPC, there continues to be newer categories that emerge. And can you benefit from this democratized distribution over time and build from somewhere? and hopefully scale to multiple others and use the whole technology stack, the backbone, the distributed infra, the distributed logistics that's now available, which serves so many pin codes in India, distributed payment behaviors. You can shop on EMI, you can shop on credit card, you can shop on UPI auto pay, you have cash on delivery, which also exists, right? So that ecosystem has taken 15 years to actually come to a place where we still don't know what will be next, right? Now you will see, concierge services. You are seeing apps where you text and something gets delivered. There will be wallets on top of, your AI apps that help you order with that frequency, which know you as a customer. So every 3-4 years you see a newer evolution coming in, but it enables more entrepreneurs, it enables traditional businesses to benefit from them and newer brands to come. But that's how we've thought about the evolution in the last 15 years.
Interesting. But do you does it people will able to sustain? Because what happens as of today, in 2020, if I talk about, people were doing 40-50 lakh rupees per month. Were a good company in D2C brands. But today, even if they're doing 40-50 lakh, they're not considered as a decent size company because competition is very higher. But still, how do you find a sweet spot of what type of founders we need to invest or what type of categories we need to invest? How this business is going to grow or die sooner? Because even if 1 crore per month also people are not able to survive. I have seen that and not able to make good profits. The unit economics very bad. In terms of that, how do you see that the sweet spot of the founder executing for any category, and which category you see the most?
I think it's a layered question, right? And first is, can we believe in a category?
Okay.
Right? Is there a category which should be there for a long period of time? Second is, can we believe in a real sub-product category of that? Because everything starts from the first thing. What is that one product that solved a real problem? And then you start with that small base of customers, that one product. And then you expand that playbook over time. It always never starts with, hey, we'll have the full basket product portfolio and we will sell it everywhere. It never works, right? So people, and this is not a new playbook. Traditional businesses were built on the same playbook. Think of a parachute oil, a sachet version of a parachute oil, right? Or Bonvita, or most household brands that we've had. There'll be a shift to newer brands who will benefit from those playbooks, but also now democratize distribution of that. But as we think about it, can we build a product, a single product or a couple of products that solve a real pain point? And when I say can we build a product, there is underlying belief that this product has ability to charge a certain price, which allows you to make certain margins, which allows you to invest in marketing a certain way, which allows for distribution costs a certain way. So on a product basis, can you make money, right? And once you have that sorted out for a certain sample set of users, can you find more products like that? Can you find the next pain point which solves a product problem and has a product value proposition? Build that playbook over a period of time. Layer on other pieces of how a successful business should be built. Maybe digital content as sort of you probably play a big role in that, right? So digital content could be one big role on how you reach the customer, how you explain the product value proposition, ability to place yourselves on the quick commerce apps, the e-commerce apps. What does it take to get there? How do you, pick the right products for those categories of audiences? A Flipkart audience and Amazon audience is also very different. So do you have an understanding of that? And fortunately now there are several founders who have that understanding. So have you spoken to figure out how to do it? So I think it starts from the building blocks, and it starts from the belief that if you found that one great product, can you scale that product into multiple other products? So if you have an act one of finding that 40 lakh revenue business, do you have visibility of the next product which can really scale it over time? And for us, it also means that do we believe in that category, the subcategory, the founder to expand that playbook over a period of time?
Interesting. This is very much well explained consumer playbook, because people do know consumers. Everyone can start an e-commerce business today, but scaling and then making it big is a very difficult thing today.
Yeah.
Previously, starting a consumer business was very difficult, and today running a consumer business is very difficult.
Yeah.
I see people just run for 3 months, 6 months, 12 months. They see that nothing is happening, but I believe nothing will happen in 6-12 months.
Yeah. It takes a long time to build trust, right? You think about financial services or consumer.
Correct.
How can you find that trust in the consumer to try your product? Sometimes they're eating it. Sometimes they're putting it on your body. This is you're bringing it home, so it's all very sensitive, right? So if you're able to explain the value proposition, and if the feedback from your early users is, really positive, what is the reason for why it is positive? Do you have an understanding of that? So we always think about know your customer, like in financial products, it's called KYC. Do you have a KYC of your customer in the sense of insighting? If you can find that insight, and you have, a playbook that you can build, which means systems, processes, having a check of capital allocation, managing cash flows, hiring a team which can do multiple tasks over a period of time from the zero to, lifetime value journey. Can you do all of those over a period of time? I think naturally we'll be successful, but also picking the right category is very important.
And over the years, these two sector as a whole, which is finance and consumer, has seen lot of things.
Yeah.
And one thing which I have always seen is trust.
Yeah.
Because one you're eating or putting,
Yeah.
and one where you are putting your money
Behind it. Yeah.
or you're giving all your accesses.
Correct.
So these two, we have seen lot of problems, also lot of solutions and lot of trust. And this takes lot of years in order to build this. Today, any app which is showing me ads in both the categories, I will not download. But when it was 2020, 21, 19, I used to download. Because targeting was there, limited applications, but people were started using to those kind of apps. Today, it is very difficult also. So do you think that to be familiar, like for example, for a new brand which is into targeting consumer directly, be it in fintech and be it in consumer, in both the scenarios, what one thing they need to keep in mind in order to reach out to customers to make them believe that they are good, because they will run ads.
Yeah. I think about it, very baseline, right? What is that one feature, or not to say a feature, but what is that one killer product that doesn't exist today? Now you have that one killer product, which is not just a UI UX.
Correct.
It has some integrations behind. It's technically complex to deliver, or it has something that you figured out from insights that is hard to replicate, right? Because when you are starting against giants largely in a sector who may have tried a version of that product, but may not have been successful. So you're sort of fighting against that. But if you can find that one killer product, and then be able to explain that in the most simplest fashion, which resonates with your user segment. Now, India is also like so different, right? You have the tier 1, tier 2, tier 3 in terms of income thresholds. Then you have age thresholds, which is the Gen Z, the millennials, that. And then you have a combination of that spread across different languages. So it's not one market at all. So can you identify that one killer product for an identified market which cuts across these three, and then distribute it such that you at least get user trust? And you don't start, day one with digital marketing, putting it all out there. You start with a cohort of users. Hopefully that sample set is wide enough, which can then allow you to expand it with more marketing dollars, with more reach, with more distribution funnel. And identifying that one killer product is quite hard.
Quite hard.
So only people who can really think about it deeply from a consumer point of view, and then be able to build everything backwards from there, and then forward from there, from on the consumer side backwards from an integration and tech stack, and maybe for a consumer it's how do you procure the right ingredients, and how do you build a great product, and which has the right nutritional value or right ingredient value, and be able to explain that to a consumer. I think if you do these two basics right, which most founders have done and hence have been successful, it starts from there, and then everything else is like a step function from there. You have to be able to prove economics, have a visibility on scaling up that business, have a visibility after that on scaling other products for that business. So it requires Act 1, Act 2, Act 3, but it starts from there.
So now we'll talk about two more interesting sectors, which is health tech and AI. as an entire India is quite big, people are getting very closer to each other. How do you feel about these two sectors?
We think that healthcare is super important. Maybe we'll start with healthcare. Healthcare is super important, and specificity to healthcare is really important. So, you want to deliver the highest quality of care. You want to make the experience of that care as frictionless as you can for the end customer, and you want to be able to deliver it in a way where, hey, the customer doesn't feel the pinch, so aided by insurance, right? Across these three factors, you think about you're getting treated for ad hoc care, cough, fever, etc. That's on a maybe more recurring basis, and then there's advanced care. Could be cancer, could be any such sort of advanced care. And as you think about each of these, what you want is repeatable playbooks, standardized SOPs, but with the emotional attachment to the customer and the patient, and the empathy for that patient, and the belief that this can be the best quality of care that you can create with the right clinical outcomes. And over a period of time, as you think about Indian healthcare, you had very distributed patient experience across India. It continues to be so. What you get in Bangalore and Bombay and Delhi is not what you even are able to get in a tier 2, tier 3, tier 4. So the talent pool is smaller, which is sort of concentrated here. And the talent pool also requires specialization. And we think that over a period of time, as Indian healthcare ecosystem evolves, there will be more specialization focused businesses. As we've seen with eye care, as we've seen with dialysis businesses, now we are seeing with, say, pet care. It extends beyond even humans, right? It extends outside of that. You think about fertility care businesses. We think there will be more such specialized, businesses over time, and which will give better patient experiences. And this also is not that the hospitals themselves, the larger hospitals, don't want to do this. They are also massively constrained by capacity, right? They also want to solve for their business health. They want to make sure that they are solving the most complex stuff which are highest rewarding for them, obviously keeping in mind patient centricity, but it allows for opportunities to build single specialty businesses over time, and we think that there are enough plays there where we can find and invest in those businesses.
Definitely we'll come to AI, but while you were speaking, I saw one company called Vetic.
Yeah.
On your portfolio. It is very interesting. Like I saw their logo somewhere. I never researched about the company too much, but it is into pet healthcare. And so what is very interesting thing about them? How did you guys invest? When did you guys meet?
Yeah, Gaurav, who's the founder, CEO, sort of built this with his team. And pet as a category, if you think about it, India is seeing over the last 10 years the rise of pet adoption. And there are several underlying factors, right? Nuclear families, you want a companion, sort of delayed deliveries of, lower fertility rates, etc., right? And as discretionary income grows, you also like to have pets and you care about them almost as they are your children, right? So there's like lots of love for these pets. So that's the macro. Now, if you think about health for these pets, maybe I can ask you, just name one brand which you think of when you think about, hey, I could take my pet to this place which could give the best quality of care for this pet. You wouldn't be able to recall a single brand, right? So that's the opportunity, right? As the India pet adoption grows, and as these pet parents care deeply about these pets and want to spend on these pets, healthcare infra for that has to be built out. And Vetic is building that healthcare infra, which is focusing on not just the basics for pet health, but across great clinical outcomes, great surgical outcomes, great grooming, great OPD consults, and all packaged with great tech backbone behind it. And that's what is exciting about it. And the vision is that it can be the category defining company in the Indian pet healthcare ecosystem. And that's why we've backed the team there.
Interesting. So, but now recently there's one founder, very early stage, he pitched me. So, but what they were building, because when you think about your health aspect, suddenly if your dog starts vomiting, suddenly they start seeing some rashes. One thing they know that they will take them to the doctor. And in India, it is very costly also. What they built actually, they made an entire AI assistant that they will feed the entire information and they just upload screen photos of the dogs, etc. They give a preliminary kind of a solution to decrease the kind of a situation for that time, and later on when you take the doctor. So it has worked because we also have a dog actually. So we have 2 dogs in our
Amazing.
office. So
you should take them to Vetic.
so they are there, and then we experimented over there for 1 month to just test the product. And he also very good person. So when he's evolving, so he only told that not everyone can go every time, but yes, they need to go. But to divert the situation or to control the situation, this we have built in order, and which was very interesting.
Yeah.
And when I was seeing this Vetic, I started relating with it that this is a thing where you need to go.
Yeah.
And dogs often get certain things like allergic to something, and you don't know what to do. And that's the moment of the panic actually which happens.
Yeah. So immediate care is obviously you have to solve it, but there's lots going behind also. Like once you see a doctor, they give you prescribed food, they tell you what medicines to take. It's also more reliable. It also solves for other needs beyond medicine. So you can get food, you can get medicines, etc. But you can also get grooming done there. So it's like an ecosystem where you want a place where you can trust, and you want to take your pet to that trusted place like you would take your son or daughter or parents, right? So that's how you would think.
But above all these 3, what we talked about, finance, consumer and health tech. Above these 3, there's one more person standing everywhere, AI, where everyone is trying to use something. In whether health tech, consumer, fintech, everyone is using something AI. So how do you see like where we should use this, how we should use it, what an effective way of using it?
I think the fundamental value proposition for anything that enable or any new technology that enables businesses is the technology cheaper, faster, better, right? Like that's the fundamental premise of a new technology. Can it help you solve something effectively at a cheaper cost and faster than what you would do traditionally? So it's a technology that every business will use, from patient doctor interaction being recorded through AI, and then getting a second look at it through a really important trained model for the doctor to benefit from, or whether it's a recommendation engine that a personal finance app will run so that they can give you more personalized benefits that may be more relevant for you. Or it could be just a pure marketing campaign which is just done on AI, where you're creating some content at higher velocity so that the consumers see it, right? So everyone will use AI. I think everyone is using AI. So it's a technology shift which everyone will benefit from. Like everyone benefited from UPI, and every one of you pays now predominantly on UPI for daily spends. This is also one such thing where everyone will benefit from it.
But you, as a sector, you as a person or as a company or a fund, are you seeing like some AI companies or the sector, because there are different utilities are there, then marketing tools are there, then LLMs are there. But you seeing any kind of a sector which you guys see very focusedly that this is one where we want to put in money, or this is one which will grow in the longer phase?
I think there is. There's 2 parts to this question. One is that, hey, there are existing business models which can benefit from AI, and that could be those existing business models are strong enough or not, and hey, AI can be a beneficiary or AI can benefit those businesses, right? So that's one which is the traditional bread and butter, which would look like every technology shift enabling businesses. The second is more specific, that are there AI first businesses which are interesting, right? And we think there are 2-3 ways of cutting it, right? One is, are there very interesting services businesses that you can think of, IT services in India done a certain way based on a talent arbitrage rate card, right? And, can you use AI to productize some of those services or just deliver those services faster, cheaper, better? And can you sell that for value? Can you sell that, hey, we will use technology to deliver you outcomes, not like a demo and a fancy UX, but we'll actually deliver outcomes for you which were not possible earlier. So that's one way of thinking about it, and we are very excited about that theme, that hey, can we use AI to deliver great service experience which was not possible earlier. And that could be IT services, that could be other forms of accounting services, it could be content marketing services, it could be any form of service which has scalability potential, and you can expand outside India, within India to deliver those. The second is, was there a sector which couldn't really scale fast, right? Which was just so difficult to scale that we couldn't do it earlier.
I'm thinking of the sector now.
Yeah, like are there sectors which really change it, not just from a single dimension, but because of AI, it's possible to do today. For example, calling. You required like dozens of people to make calls. Now, AI can receive and make calls. Very simple baseline example, but extend that to several other facets of like concierge services, for example, right? You can use AI to deliver great quality customer experience. And we think there'll be opportunities and pockets for sectors which at least we couldn't back earlier, but now can be backable with AI taking center stage of how those businesses can operate. So those are the two vectors in how we are thinking, but very excited about the potential of the technology shift that's happened.
Interesting. So now as a whole, like when someone approaches you as a founder, what do you see the most interesting factor that you reply to the founder very interestingly? Yes, this is one I want to reply, I want to talk to the founder.
I think we attempt to reply. Or
obviously we will reply everyone.
I think it's just, it takes our learning capacity also to sometimes appreciate founders. So we try to be learning machines ourselves. We also try and evolve every single day. We try and get better. So sometimes we are able to appreciate it really quickly, and we are as excited, or if not as excited, very excited about the prospects of how a company can shape up in a certain sector. And across these roadmaps, which is what we spend most of our energy in, which is why we have this roadmap orientation, that we'll find interesting tailwinds in sectors that entrepreneurs are looking to build behind. And once we have an understanding of that tailwind, understanding of more depth inside that roadmap, then we appreciate the insight that the founder is sharing even more.
Correct.
Insights can't be borrowed, unfortunately. Like if you told me something and if I've not lived it or understood it myself, I'll not be able to appreciate it. So just my nature of understanding, or just every investor's nature of understanding of a certain sector, requires a thesis building. It requires, talking to several people. It requires parallel thinking that, hey, something's worked in this sector, can it work in this sector or not? And it requires some experience, right? It requires playbooks of historical patterns that have emerged, what could play out. And it's a combination of this, it's kind of a rabbit hole in your head, but you're trying to assimilate pieces of decision patterns that can help you get convinced or excited about a certain topic. But the roadmap piece is really important for us. We think that's how we've channelized our curiosity to find these pockets of gems in Indian ecosystem.
Beautifully explained, because it's just not about person what they're texting, but how they're explaining you.
And whether you have you are able to build context with that.
Correct.
Sometimes the explainer may be explaining it to you, but you just don't know. So oftentimes we don't know, so we can't do much. But if we know and if we can see the pattern, then it's great, right?
Interesting. With this, thank you so much, Anurag.
Thanks so much, Rishav.
Thank you so much for being here, and it was amazing speaking with you.
Thank you for inviting me. Thank you.